Good afternoon, Sue Smith sitting in for Aaron Rand on this beautiful Friday, and lots of business stories to get to today, starting, of course, with the big news, which is that Iran's foreign minister said that the Strait of Hormuz has reopened. But then he sent another text saying that the U.S. blockade of Iranian ships and ports would continue until its deal with Iran is complete. So what's actually going on? Amanda Lang is CTV News chief financial correspondent, and she joins us on Fridays. Good afternoon.
Hello.
What do we make of the conflicting messages coming out of Iran?
I mean, the confusion, of course, is really, it was the White House that said, actually, we're going to keep blockading. They sort of jumped the gun on the celebration. The markets are looking for any piece of good news that they can hang on to. And so we've seen, of course, in the past, this whole week, stocks have rallied on the idea that there would be some end to this. It's probably premature to say that it's over. It's definitely premature to say that the cost of this conflict is gone, because even if it all ended today, as we know, there's damage that's been done to infrastructure in the region and just in the slowdown of the supplies that has already taken place that has to ripple through our system yet. So the inflationary effects are still ahead of us because it takes time.
But so what are we seeing in the immediate term, though? It does look like fuel prices or oil prices have dropped a bit.
Yeah, you'll see the futures market respond. So, one of the weird things, of course, for those of us who function in the real world, which is we need gas, we go to the gas station, what price is it today versus tomorrow? It's kind of frustrating because the markets that set those prices are driven by people who are investing in paper transactions. So the futures trading in oil and gas has very little to do with the physical supply. Right. They're supposed to be connected, but so you'll see sort of speculative moves in those markets that do affect us in the immediate term, which is a bit frustrating. It's why you hear talk about where is our oil reserve and the International Energy Agency releasing oils, because they're trying to actually address the actual supply issue, not just that paper market. We're going to see these fluctuations. So what I would say is be a little bit prepared for the volatility. It's going to stay with us in the weeks ahead, but that it should settle down if we see things start to open up. We were hitting a crisis level. Like, I don't know if you saw the warning from the IEA about what's going to happen to jet fuel in Europe, but we were getting to a point where some airlines would have to down fleets because they just wouldn't be able to pay for or even get the fuel that they need.
And well, speaking of which, Air Canada announced today, and I don't know how how direct the link is, but they're stopping flights to JFK from Montreal and Toronto. What do you make of that?
Yeah, it could be, there's a number of factors that it could be. I haven't seen their rationale for it. It could simply be capacity. It certainly could be fuel. What we saw, of course, in the last week or two is Canadian Airlines adding a fuel surcharge for their passengers. And we're already going to likely see the impact of that and the general turbulence on people's travel plans. So it could be they just saw capacity is down enough, and flying an empty plane when the fuel is expensive really doesn't make sense. Yeah. So you could see why they might say, and maybe that I should dig in case that's another route that's a reflection of our travel to the U.S. drying up.
I do think that is part of it. I think that they were, and I think they have multiple flights a day. So I think that they were, it's definitely not that busy.
Yeah, and just a sign of the times, maybe this is going to be another summer where, Canadian tourism to the U.S. is just not what it used to be.
Yeah. So it's been interesting with all this chaos going on, seeing the governments using what levers they have. We've, of course, talked a lot about the taking away the gas, the tax. But now we're looking at the Bank of Canada maybe cutting rates instead of hiking rates. Is that even linked? And what do you think of that?
Yeah, I think it's tough to call. I've seen, and I saw there was really smart people saying, look through the inflationary fear at the underlying economy. I definitely would have said if we hadn't had the Iranian conflict, the bank probably was teetering more towards cutting than raising because our economy was slow. We had, of course, the huge job losses, weakness in the labor market in the start of this year. The February inflation data was below 2%, so lots of room for them to worry about growth rather than inflation. Everything has changed, and so we do have this inflationary pressure. They'll be looking for, I think, sort of firmness in the labor market, what's really happening in March before they really make a call. But yeah, I think you could go either way. because the bank is so concerned about inflation, I would suggest they're more likely to stay on hold or raise before they're going to cut, because the help our economy needs might be more fiscal, as we say, right, from government rather than from the Bank of Canada. If the bank cuts rates, they're going to stimulate borrowing and the housing market. And those are two places, you could argue, do we really want to stimulate the housing market right now when we're finally starting to see some affordability creep back into it?
Good point. And to your point earlier, the inflation pain is still ahead. So, also looking ahead to what those numbers will be if and, depending on how long this conflict in Iran goes on for.
Exactly. Yeah.
Okay, so just before I let you go, I want to talk about this idea that was floated or actually announced by Prime Minister Carney, which is a new Canada Investment Summit. What do you know about it and what do you think about it?
So, I know only what's been announced, like everybody else, which is that this fall they're hosting a Canada Investment Summit. They're hoping to invite global investors, CEOs, business leaders. In the last budget, the Prime Minister and the Finance Minister outlined policies that they said or hoped would unleash $1 trillion of private sector investment. And this is part of that. Yeah. And the question is, what will they do there? What are they showcasing? What has to happen there? It's an interesting idea. A lot of what would attract, of course, private investment to our country doesn't happen at a summit. It happens in laws and regulations, the absence thereof. And so the work that has to happen to make all of that be in place is much more likely, in my view, to come in the fiscal update, which we're going to get, of course, in just 2 weeks' time. So watch that space for what the government's doing to attract investment. That's where the real work happens.
And do you get a sense of what sectors they think that will be more attractive to outside investors, to private investors?
It seems clear that their initial focus is on, through the Major Projects Office, on big infrastructure, big energy-related projects. That's a way to get big ticket capital into the country. Yeah. The other form of investment we really need is Canadian businesses investing in themselves. So business investment in new equipment, in new materials, and new products. And that comes from, a level of confidence, and that comes through borrowing. And that would be through our banks or other forms of borrowing. And that's not something that might happen at a summit like this. But again, I'd go back to those are kind of the more broad policies you set for the whole economy that encourage confidence. We're not seeing a lot of confidence for business right now, and that's what we need to see turn around.
Plus, I know this sounds hilarious, but honestly, $1 trillion is just such a crazy number. It's funny that they would throw that number out. What does it even mean?
It's a big number, but I guess they're shooting high, right? And because again, to get there, you need a few really big projects. So if you're going to build a new LNG terminal, for instance, and back it with private capital, you get there. You can get a quarter of the way there pretty quickly. So it's an ambitious number, but I think it's the time to be ambitious, right? Because we have so much at stake.
All right, we'll leave it there. Thanks so much, Amanda. Have a great weekend.
Great to talk. You too.
You too. Bye.
iHeartRadio is throwing it back.
2010s, the decade.
To the days of huge hits and unforgettable anthems. A non-stop stream of the biggest and best.
Drake, Rihanna, Beyonce, Katy, Gaga, The Weeknd.
And more. All your decade-defining favorites all in one place.
Hi, it's Katy Perry.
Hey, it's Bruno Mars.
This is Kesha.
Find 2010's The Decade on the free iHeartRadio app. Preset the station so it's always one tap away.